I was never really a runner. The way I see running is a gift, especially when you have stage 4 cancer. I'm Anne. I'm running the Boston Marathon, presented by Bank of America. I run for Dana-Farber Cancer Institute to give people like me a chance to thrive in life, even with cancer.
Join Bank of America in helping Anne's cause. Give if you can at BofA.com/supportAnne. What would you like the power to do? References to charitable organizations is not an endorsement by Bank of America Corporation. Copyright 2025.
This episode is brought to you by Walmart. New beauty is in bloom at Walmart, and it's all about springtime radiance. From Drybar, Tula Skincare, and hundreds more available online, Walmart has the premium brands you want and this season's on-trend products for flawless, glossy hair and hydrated skin. Big name beauty brands? Check. The things you love? Check. Find trending spring beauty and all you need to look and feel gorgeous at Walmart, on app and online.
Hi, and welcome to the 10-Minute Food Truck Training Podcast. My name is Bill Moore. I'm the founder of the Food Truck Training Group on Facebook, co-owner with my beautiful wife, Melissa, of our own food truck. It's called Food Truck 101, and I'm the executive director of the National Street Food Vendors Association, which is a nonprofit dedicated to education, advocacy, and uplifting all food vendors. Earlier this week, we had somebody post a little celebratory comment on our Facebook group, and they said, hey, I just started my LLC. Let's see what happens, or something to that effect. Basically, the guy was excited that he was able to file the LLC. And most of the comments were very supportive. Hey, congratulations. Can't wait to see what you do, that kind of thing. But we had somebody that said, I recommend that you look into an S-Corp. And of course, the question is, what does an S-Corp do for me? So we're going to address what an LLC is, what an S-Corp is, and how they impact your business, and which one is going to be the best for you. Typically, when you get tax advice on Facebook or any other social media, it's not exactly the best advice you're going to get. Part of it is it's given by amateurs, people who have listened to other amateurs tell them what to do, and they think, well, I did it and it worked, so let's recommend it to everybody else, without giving the details. So the first thing you want to think about when you're doing an LLC is it protects you to an extent. And that's the most common reason people say, get an LLC to protect your house. That is true, but there's a big caveat there. It only protects your house and your personal property if and only if you operate the LLC within the definition of your state. So, for example, if your state says we need to have an annual report, no problem. You file that annual report and do whatever the state has asked you to do, you'll continue to be covered. But if you don't file the annual report, guess what? You don't have the protection of an LLC. Okay, paperwork's amazingly, some people just forget, can't afford it because there is a cost every year. You have to throw some money at the state for them to continue your LLC paperwork. The other thing that people do that really messes them up is they don't keep good records. Since you own the LLC, all the income from it's yours anyway. So people don't have a problem with pulling money out of that bank account for the LLC and using it to pay their electric bill at home. But they don't list that as an owner's draw. They just pay the electric bill directly with that debit card. So now what you've done is you've commingled your personal finances with the business finances. And if you go to get sued, a judge is going to find that out fairly quickly because your bank statements are going to show it. And then they're just going to say, okay, the LLC protection is no longer valid because there's no difference between you and the LLC. An LLC is a baby. You got to think of it that way. It has its own rights, its own responsibilities, and you have to make sure that those rights and responsibilities are adhered to. If not, then the judge is going to say, it's really not its own entity, it's just you with a different name. So the judge says that your house, your car, any money you got in the bank, any stocks or any bonds, anything like that now becomes at risk if you were to lose a lawsuit. So you got to understand, to keep the LLC in force, you got to follow what your state wants you to do. That's just a little short snippet on what an LLC can do protection-wise. And people will use that as a reason to get an LLC. It protects your stuff. Well, it doesn't. You got some rules and regulations you got to follow to protect your stuff. Okay, the other thing that people talk about is taxes. And an LLC can help you with taxes. And then, of course, an S-Corp helps you in a different way with taxes. But what are the differences? An LLC, by default, is treated as a sole proprietorship. And that means that all of your profits and all the business profits are reported on your personal tax return. It's a pass-through entity. And you pay self-employment tax on that. And that's 15.3%. And oh my God, people freak out about that. What people don't understand, and I want to make you understand, you pay FICA tax. That FICA tax is 6.65%. that comes out of your paycheck if you work for a company. They send you a check or you get that little receipt that you've been direct deposited, and that receipt will show you that they've taken out taxes. Income tax, FICA tax, which is Social Security and Medicare. And that comes out of your check. There's no way around it. Comes out of everybody's check if they work. What most people don't know is that 6.65% that comes out of your paycheck is also matched by the company. So if you made $100 and you're sending $6.65 to the federal government, your company that has written that check for you is also sending $6.65 on your behalf. Now, what most people can't figure out, and sadly most accountants and most websites don't explain to you, is if that $6.65 was not being taxed, that would just be your compensation anyway. So the quote-unquote penalty of being self-employed, you're paying both sides of it regardless. You're paying your personal and you're paying the company's FICA, total of 15.3%. If you work for a business and they're paying it, they could easily just give you the part they send to the government, just give you that as part of your compensation, because that's how it looks like on their P&L. It's called payroll taxes. So when they have, and if you're the only employee of that company, the payroll tax is going to be the exact same amount as that thing that they call self-employment tax. Oh my God, they're penalizing us for working for ourselves. No, they're not. It's a way for an accountant to make you feel like you're being penalized. It's a way to encourage people to, hey, you don't want to run your own business because you're going to get that self-employment tax. You're being taxed anyway. You just don't realize it because someone else is paying for it, but it's still your compensation. So don't get freaked out about that. So here's the thing. If you're an S-Corp, it's a tax election. What does that mean, Bill? That means that if you have an LLC, you can elect to file as a sole proprietor. Don't have to file any more paperwork because that's just what you do. Or if you're an LLC, you can elect to file as an S-Corp. No more paperwork needed. That's a personal choice for your taxes. And you know why? Because when you go to fill out your tax return at the end of the year, there is no check mark for an LLC. It is an LLC in and of itself is not a tax filing status. No one ever talks about that. It's a pass-through entity. It either passes through to you on your personal taxes as a sole proprietorship, or you can elect to file as an S-Corp. So there's no additional paperwork needed. It just changes the forms that you're going to be sending to the IRS at the end of the year. Now, what an S-Corp means is you become both an owner of your company and an employee of your company. And as an employee, that means you have to pay yourself a salary. Anything that's above the salary, technically profit, that's taken and given to you as a distribution. So basically what the government in its infinite wisdom does is it gives different stupid names to your money. If you were an LLC filing as a sole proprietor, all the money that the business makes yours passes through to you on your personal income tax return. If you file as an S-Corp, let's give that money a different name. It's still profit, but you're going to give yourself a salary, and then the rest of it is a distribution. Now, here's where you can make a little tiny bit of money. Distributions are not considered subject to tax. Now, they're income, but the FICA isn't taken out of them because it's just income. So that's where you save a little teeny tiny bit of money. So let's talk some numbers. Imagine your business does $100,000 a year in profit. Okay. And if you're not making $100,000 a year in profit, we need to work on your marketing plan. But let's say it does make $100,000 a year in profit. If you're an LLC and you just elect to tax yourself as a sole proprietor, all of that $100,000 is subject to your self-employment tax, which again is 15.3. That means that $15,300 goes to taxes. That money is going to your future. That's your FICA, which is Social Security and Medicare. So $15,300 is going to your account for the future. And don't say, well, by the time I get that old, they probably won't have it. Because guess what? Bill is that old. And they were saying that exact same stupid thing in the 70s. When I was growing up, well, they'll never have Social Security by the time you get that old. They'll be bankrupt. They'll be something else. Well, guess what? Bill's smart. I started collecting my Social Security at 62 because I wasn't going to take a chance that I would kick the bucket and not be able to collect any of that money. So as soon as I got old enough, I'm taking Social Security. This year I turned 64, last year I turned 65, and now I get Medicare as well. So all the money that I paid all of those years I was working, I'm starting to get it back. Most young people don't ever think about that. So that $15,300 is just going to be set aside, and you'll get some of that back in the future, provided you live long enough. Now, if you're an S-Corp, here's what happens. First thing you got to do is pay yourself a reasonable salary. The IRS will check to see if most other businesses that are just like yours pay their management similarly to what you decide to pay yourself. So let's say that in our industry, $50,000 roughly for a manager of a small restaurant or a food truck, that's normal. So you take a $50,000 salary. The other $50,000 is going to be a distribution. Now, your salary is still subject to the payroll taxes, which means you're paying $7,650 in Social Security and Medicare. But the other $50,000 that you have set aside as a distribution, it avoids that tax. So it's in your mind, you're saving $7,650. But here's where it gets tricky. Your salary has got to be reasonable. If you decide to say, well, I'm just going to pay myself $10,000, you're going to have a big red flag on your tax return, and you're going to be sitting in front of an IRS auditor explaining why you think that a reasonable salary for your position is only worth $10,000. The IRS watches that pretty closely. Now, there is another tax break that comes into play. Very few people talk about this one. It's called the QBI, and what that stands for is Qualified Business Income Deduction. It lets a pass-through business like an LLC, you can deduct up to 20% of the profit before paying tax. But here's the catch. All your business profits qualify for the deduction if you're just an LLC filing as a sole proprietor. But if you file as an S-Corp, only your distribution qualifies, not the salary. So while being an S-Corp saves you money on self-employment tax, it reduces your deduction. It becomes super important that you're working with a financial planner that is familiar with your overall financial status, not just your business, everything that you own that could possibly be taxed. And then you also want to talk to that financial planner about your future. You want to make sure that your structure maximizes your total savings and it doesn't hurt your future. Now, here's a downside to everything that we've been talking about, because you're thinking, well, it sounds like we can get some deductions and keep money in our pocket today. Yes, you can. The downside to consider is your Social Security. When you reduce your salary, and that's what you're doing, remember you have that $100,000 profit, you can either pay $15,000 on it, all of that goes to your future Social Security and Medicare, or you can do that, file as an S-Corp, and then put that 7650 number we were talking about towards your future, and then not worry about the other 7650. The problem becomes you're paying less into Social Security, which means when you go to retire, your benefits are reduced because you haven't been putting as much money into it. If you're relying on Social Security when you get to be my age, and again, I'm over 62 years old, that could be a problem. If you decide that all I want to do is the government to take care of me, that's going to be a problem. Because remember, I live in a community of a whole bunch of retired people. The ones that are doing well not only have retirement from Social Security benefits are paid based on how much money you put into them. So there are people around me that I make more than they do, and there are other people around me that they make more than I do because they paid more through the course of their lifetime, and now they're getting that back. And yes, the government has a really ridiculously complicated way of figuring out how much you get, but it's okay. Just understand, the less you put in, the less you get back. So if you're going to be depending upon Social Security, the smart thing, rather than go, well, I don't have to pay those taxes, I'll just spend all that money now. You want to take that same amount of money that you have saved, put it into a solo 401k or a SEP IRA, and then invest that money in your own future. Saving money today makes you feel really good because now you can go out and buy that real fancy car or stereo or a house or whatever it is that you want. But when you turn 65, you'll definitely wish you had more money coming to you every month so you didn't have to struggle. Like I told you, there's people around me that I make more. Some of those people that I make more than, I end up helping. Melissa and I end up giving them a whole bunch of food and other things to help them because their Social Security is a fixed income. We can't go and make overtime. When you're 75, 78 years old, like this one gentleman is, he has to watch every single penny. So when the rent goes up because the landlord says, hey, I can get more money out of this piece of property, he's got to make a decision. Do I stay here and eat $20 less of food a month because the landlord has moved the price up? Or do I go somewhere where I can afford the rent and still be able to eat? And there's people around you that make that decision every single day. I don't want you to have to make that decision when you're 65. Do I go out and eat a can of Spam and make it last for a whole week so I can have some kind of meat? Or can I at least eat decently? If you're thinking about, should I be an LLC? Should I file as an S-Corp or should I file as a sole proprietor? Talk to somebody that's got your best interests at heart, and that is not a Facebook group. Facebook groups, for the most part, give good advice, except when it comes to taxes and anything legal, because you have a whole bunch of armchair attorneys that will tell you, yes, this is the thing to do because, and they leave out a whole bunch of details. And sometimes those details will get you in trouble. Just like, hey, let's just be an S-Corp. You need to be one. Without understanding that it impacts you today and it could impact you in the future. So talk to a financial planner, talk to an accountant, talk to a tax attorney. Here's 5 things you should ask them. Very first one, if you're thinking about being an S-Corp, what is a reasonable salary for my business type? Because they'll know. They'll tell you what the IRS will accept and what the IRS won't. Would I actually save money switching to an S-Corp, or would I lose benefits somewhere else? And when they say, oh no, switching to S-Corp save you money. Okay, but what about my Social Security? What does that do to me in the future? Can I invest that money I'm saving in a more effective way and make more money? That's what you got to be thinking about. It's not money in your pocket today. It's money in your pocket in the future. How will the QBI deduction impact my taxes as an LLC versus an S-Corp? What's the best way to invest my tax savings for retirement? Are there any state-specific tax rules that will affect this decision? You want to have those questions ready when you walk in and then get answers, and then ask follow-up questions if you don't understand. It's okay to not understand something. It is absolutely okay to ask questions. And if you feel embarrassed about asking questions, do it this way. Hey, Mr. Tax Accountant, I want you to answer all my questions as if I'm a dumb blonde. And we all know the dumb blonde jokes. Or you could say, hey, I'm giving you a quiz. Doesn't matter. Ask the question. If you don't understand something, keep asking them to rephrase it until you do. It's your future. Don't mess it up. Should you elect S-Corp status? Well, the answer is it depends on you. If your business is profitable and growing, an S-Corp could save you a bunch of money. But if your income is lower, the extra paperwork and the potential loss of tax deductions may not be worth it. It is not a one-size-fits-all. And even if somebody recommends that you check into an S-Corp, unless you know what to ask, you're just going to look at it on the top line surface and go, hey, it'll save me $7,600. Yeah, I want to do that. Not quite how that works. The bottom line is don't make this decision alone. Talk to a financial professional. Use the questions I mentioned a little bit ago to help you get started. Your tax structure should always be working for you. It's not just something we give to the government. Thank you guys so much for listening to the 10-Minute Food Truck Training Podcast. If you're finding everything that we do helpful, please consider subscribing. And if you really love what we do, show some support. There's a link in the description to make that happen. Until next time, you guys have a profitable day.